Canadian housing market update. Where does Canadian real estate go next? Hey, what's up guys? Welcome back to DG Capital. Today, we'll be taking another look at the Canadian housing market. So, let's get started. August 2020 has been a historic run for the Canadian housing market. The market has continued its incredible run, with average real estate prices jumping close to 20% compared to a year ago. And the number of homes sold smashed the monthly record. Close to 60,000 homes were sold during August 2020. That's up 33% compared to just a year ago. That is insane. It was a new record for the month of August, and the sixth highest sales total for any month on record, especially considering we're in the middle of a global pandemic with staggering unemployment rates. Much of this can be attributed to the slowdown in spring of 2020, when many Canadians were under heavy lockdowns because of COVID-19. So the figures we're seeing in August is sort of a catch-up for buyers who are waiting on the sidelines. The markets that had severe inventory shortages are seeing fierce competition and multiple bidding wars among buyers this summer. Any guesses as to what those markets may be? The national average home selling price also set another record in August, with the average Canadian sale price skyrocketing to $586,000. That's up 18.5% just from a year ago. Keep in mind, this number is somewhat skewed because of the disparity between the rest of the cities in Canada versus two particular cities. I'm looking at you, Toronto and Vancouver. According to the Canadian Real Estate Association's senior economist, the market still has more catching up to do. Since the average home sale price can be skewed because of Toronto and Vancouver, the Canadian Real Estate Association has created another metric called the House Price Index, which also had the biggest leap since 2017, going up 9.4% in August. No matter what metric you look at, August was an insanely hot month for the Canadian real estate market. Even the worst economic shock couldn't derail Canada's housing market. The dramatic plunge in activity in March and April turned out just to be a temporary pause. Buyers and sellers came running back this summer and quickly made up earlier declines. Honestly speaking, these figures really make me question our beloved Canadian housing market. When the music stops and gravity takes over, where does it go from there? Let me know in the comment section whether you're buying or selling. What's your mindset like considering today's market, as you're either making offers or considering offers? Would love to hear from you guys who are making these tough decisions. What's going through your mind right now? The other interesting piece I keep hearing is that those who live in dense areas like downtown Toronto or downtown Vancouver, there is a shift in these homeowners moving to suburban areas. In fact, according to CBC, some of the highest price gains are coming from suburban markets that are just outside the major cities, where prices have risen by more than 25%. I did a video recently taking a deeper dive into this topic. I will leave a link in the description below so you can check that out right after this video. One of the most compelling markets, in Ontario at least, has been Windsor, with a lot of investors looking to get in on the ground floor. But they may need to hurry because sales activity and valuations are rising. According to the Windsor Essex County Association of Realtors, or WECAR, real estate sales surged over 17.6% in just August compared to the same time last year. Average home prices also rose 28%. To over $430,000 in Windsor. While this market remains the most affordable in Canada, demand is on the rise, so it's unknown how long Windsor will remain on this list. Moving along, the Durham region, which is comprised of Whitby, Oshawa, Ajax, Uxbridge, and Clarington, has also attracted a lot of buyers from Toronto and Hamilton, especially as these cities have become too expensive for home buyers. August continued to be a big month for this municipality in Southern Ontario, based on the latest figures from the Durham Region Association of Realtors, or DURAR. In August, the average housing price in the Durham region reached over $730,000. That's a 19.5% boost from the same time last year. The number of new listings surged 19% year over year to over 1,800 in August. On a national level, based on a comparison between sales to new listings ratio with long-term averages, only about a third of local markets are in balanced territory. The other two-thirds of the market are well above long-term norms. The number of months of inventory is another important measure of the balance between sales and the supply of listings. It represents how long it would take to liquidate current inventories at the current rate of sales activity. There were just 2.6 months of inventory on a national basis at the end of August 2020, the lowest record of reading for this measure. At the local market level, several Ontario markets are now into weeks of inventory rather than months. Looking at the MLS House Price Index, the largest year-over-year gains were recorded in Ottawa at 19.9% and Montreal 16.4%, followed by increases between 10 and 15% for the GTA and surrounding Greater Golden Horseshoe markets. Moncton, New Brunswick was also up in that same range of 10 to 15% for the month of August. Really? Moncton, New Brunswick? Really? Moncton, New Brunswick? Looking at Calgary, Edmonton, and St. John's, prices were flat on a year-over-year basis. Meanwhile, in BC, prices were climbing in the 3.5% to 5.5% range. Toronto's real estate board also reported a surge of sales in the last month. TREB says that almost 11,000 homes were sold, up 40% year over year, with a boost of almost 20%, with the average selling price now at over $950,000. Since the global financial crisis that occurred between 2007 and 2008, Canada leaned on the housing economy, and it shows. Canadian home prices have increased a whopping 88% from 2005 to 2020. The next closest G7 country is Germany, with prices having increased around 32% in that very same period. If you're doing the math right now, yes, that is nearly a third. For context, the US real estate prices have only increased 3% during that same period between 2005 and 2020. Again, there was a global financial crisis during that period. For Canada, most of the price growth narrative actually starts around 2015. When looking at the period from 2005 to 2015, prices in Canada for real estate went up 50.5%. This time around, the next closest G7 country is France, where prices went up 4.8% during 2005 to 2015, less than 1/10. For contrast, US real estate prices were actually down around 15% during that same period. Rather than accepting a market inefficiency, Canada actually doubled down on credit expansion. In 2019, real estate transactions were generating almost half of the GDP growth. This isn't just a Toronto or Vancouver thing either. The national index outpaces growth for every other G7 country. Having said all this, where is the market headed next? According to RE/MAX, the Canadian housing market is expected to remain active for the remainder of the year due to pent-up demand and low inventory levels. Canadians are almost equally split in their confidence in the Canadian housing market, with 39% as confident as they were before the pandemic and 37% slightly less confident. On the other hand, RBC Economics is expecting things to generally cool down later this fall, but stay well out of the deep freeze zone. The pandemic itself will generate higher than usual turnover in the market by altering the needs of many current homeowners who are opting to move, something they might not have considered a few months ago. Tight demand-supply conditions in most markets will keep the balance tilted toward faster price increases in the coming months. The effect of any expected cooling in demand will not be felt possibly until several months later. The real fear is that Canadians who really shouldn't be in the housing market are still rushing in for fear of missing out. Lack of supply and ultra low interest rates with lenders are all too willing to support this. And that's it for this video. Make sure to hit that like and subscribe button if you want to continue seeing more videos like this. Please also share this video and let me know your thoughts in the comments. And I'll talk to you guys next one.